Welcome, everyone, to the Node, our special edition today. We're going to be talking to one of the founders of OPNet, a Bitcoin native project that is building DeFi out on native Bitcoin. So, very excited about that. I'm actually just going to do the news this morning, and I'm going to kick this over to David and Jeff. Jeff has been doing a bunch of deep dives into this project and doing some farming and things like that, helping test the network. So I feel it's appropriate that I just kick it over to those gentlemen. They're going to be able to ask those pointed questions, those technical questions that I'm not going to be able to ask. But I'm going to be in the wings. I'll take care of the chat and be chatting with you all. But let's jump into a couple quick news topics, and then I want to give max time to that interview. So jumping right over to the news, let me bring this up. Let's see.
And Mike, how do you like that new website where you can post the sources right there in that left-hand panel so everyone can see what it is that we're talking about when we run through the news?
I started doing that this morning. And so, let's let me share my screen. And we will start out with, there we go. That's what I'm looking for. All right. So if today is the last day that we're going to be streaming to our old channel, DeFi, Crypto, and Airdrops. So if you could jump on over here to at the node_channel and follow us there. We'll be streaming to all the X accounts. But as far as YouTube, this is the only place to go. Want to do a quick shout out to Don, DeFi Don. He's going to be starting up DeFi High again. The show that me and David started doing. It's entry-level DeFi education. He's going to be going through the course material from a DeFi university that David put together. So I highly suggest that if you are interested in DeFi and you want to learn about, very simple, very easy to understand entry-level fundamentals, that's the place you want to go. 100% free. We don't ask for anything. So we just want to help all of you out there because I personally understand how hard it is to get into some of these things like DeFi and to do it properly.
Right. But Mike, if you want to send us money, that's okay.
Oh yeah, by all means.
You can do that. So remember, value for value. So I'm building a zap button in. If you want to zap some sats, that's totally up to you.
All right. So next up is our Discord. We have a great group of people in here. We keep it clean. As far as a bunch of the mods, anybody that's scammy or anything like that, they're immediately banned. But we share all kinds of stuff in here. We have a gaming channel. We talk about emergency prep and homesteading, and then of course general crypto. We got news. If you have any DeFi questions, you can kind of ask the community. But by all means, feel free. This is all free as well. Almost everything we do here is free. And then, of course, our X account at the Node channel. We just started this. We just broke 100 followers, so appreciate that. And I'm not going to show all of our personal ones, but I'm Veteran for Crypto. David is DeFi U. All the links are in the description. So go ahead and check that out. And then what David was talking about, this is our homepage, our official website, thenode.pro. And this is the research links, all the news links that we're going to be talking about here in a minute. This is where we should be live. Let me refresh this.
Yeah, I might have to hop into Cursor real quick and debug this.
All right. So this is where we'll be live and in the chat. So let's go ahead and jump on into the news. So first out the gate, we have BlackRock's iShares Staked Ethereum Trust. We talked about it yesterday, but it looks like that it launched with over 15.5 million in first day trading volume. So it looks like it's doing pretty well right out the gate. Do you have anything new to talk about on that, David? We talked about it yesterday.
Yeah, I did see that, so that's the ETHB product. ETHB is that staking ETH ETF that BlackRock launched. For me, there really hasn't been anything that's changed. One thing that I think about quite a bit, though, is what's going to happen when some of these, digital asset treasury companies, some of the largest of them, you could probably think Bitmine. What happens if they become forced sellers? What happens? Because this is a Bitcoin bear market. And during Bitcoin bear markets, you usually see a trough that's 70% down from an all time high. So
Mhm.
we are not 70% down from an all time high. That
Yeah.
tells me that there might be more downside ahead. If there's more downside ahead for Bitcoin, well, I can think of literally three altcoins that have outperformed Bitcoin. And that
Mhm.
means 99.9% of alts have underperformed. So if there's another leg down out of BTC, those alts are just going to get slaughtered, man. I'm thinking that we get Altmageddon at some point this year. And there were a lot of Bitcoin treasury companies, man, that, were
Yeah.
basically buying the top.
Yeah.
Um, and so like what happens when they become forced sellers? I saw some news earlier today that Tom Lee was selling like $20 million of, I think, Bitcoin or something. Could have been Ethereum, wasn't quite sure. I was just scrolling through really, really fast. But it just made me think like, hey, there's some Solana treasury companies that if
Mhm.
they choose to hold, will probably be down 80 or 90% on what type of a treasury is that? Like if you're a business owner and you put all of your cash into an asset and it goes down 90% over the course of 12 months, dude, like people are getting fired. Heads are rolling over something like
Yes.
that.
No.
So yeah.
Yeah, and that's a good point. We talked about it yesterday, so I won't belabor it. But the unstaking, can take days, if not weeks, depending on the queue.
Right.
And
Right.
so there's some concerns. Definitely you want to make sure you know these nuances before you invest, in these assets. So moving right along. Looks like a crypto trader loses nearly $50 million.
Oh, horrible fat finger mistake. I saw that. Yeah.
Yeah. So, well, you know what? Let's. I'll finish reading it, but I want to kick it over to you. And this goes back to what we talk about, where you need to come up with best practices. You need to come up with good habits when you're going through and you're doing swaps and you're doing DeFi. Make sure you're reading when the pop-ups come up, and because this is something that could be easily avoided. If you're reading those pop-ups, because it's slippage and there's all kinds of things that you want to read. You're swapping this much, you're getting this much. But basically, what happened was a large USDT to Aave trade. So they were swapping from USDT to Aave, and the interface slash COW protocol triggered extreme
Yeah.
slippage,
Cow
wiping out
swap.
50 million to just $36,000 worth. So basically, they gave up $50
99.
million of
Yeah.
USDT for $36,000 of Aave. So
Oh man.
what do you got on that, David?
Oh, dude. So I have a lot of money on Aave. I've spent a lot of time working on Aave, and you've got to heed those slippage warnings. You really do. So if you're swapping either your collateral or your debt position on Aave, let's say that you want to swap your collateral position. Let's say that
Mhm.
you've got ETH that you've supplied as collateral, and maybe you want to exit that ETH position and swap that for USDT. Dude, you have got to double, triple check the slippage and just make sure that you're okay with whatever that slippage is. And it seems as though this trader, unfortunately, didn't heed those warnings and lost $50 million dollars as a result. Um, Now, CowSwap is great. It wasn't the problem. The protocol was not the problem here. This was
It was user error,
yeah, this
and
was
it
user
usually
error.
is. Yeah.
Yeah, yeah, it really was. And, like, look, Mike, I've worked with so many clients privately over the last couple of years, this cycle,
Mhm.
and people tend to move too quickly. They really do, man. And like even the guys with like seven or eight figures, like when I would see them navigating through these different, dialogue pop-ups from their wallets, they move way, way too fast. So,
It's
like,
complacency, we're all guilty of it. I mean, well, I won't say we're all guilty of it, but I'm guilty of it. And not just in crypto. If you get used to doing something over and over and over, it starts to feel mundane, and you start to lose that attention to detail. You're like, oh, this again, and you're just clicking through. You need to discipline yourself. You need to slow down. You need to read these prompts because, like in this case, it was a $50 million mistake. You
Yeah.
know, you want to ingrain these good habits so that when you're clicking through, those windows, that you're looking in almost like a checklist of, okay, I'm swapping this asset, this much of it, for this asset, this much of it. Everything good? All right, click.
Yeah, and there's no rush. There's no rush. Why the rush? It's not like whenever I'm working with a client and that client sharing his screen, they don't have to like show off to me. Like I just want to make sure that they do it right. Like no rush, slow down, make sure that everything is where it's supposed to be, and then sign the transaction only after you verified everything. I mean, that's a fat finger mistake, man. That's a $50 million fat finger mistake. And guess what? There's no one to come in and save that guy. It's gone. It's
Yeah,
gone. And it's
yeah.
over. So that really sucks, man.
All right. So moving right along, I've just messaged Jeff and told him to get in the studio so that whenever we're done with this in a few minutes, you guys can take over. So Jeff, I know you're watching. I see you. Get in here. All right. We got Bitcoin open interest climbs to 107.6 billion. Funding rates are positive, pointing to bullish bias as price builds momentum towards potential 73K to 74K levels. Are you seeing this in the markets, David?
One more time, Mike. I was in Cursor. I got the website working just now.
Oh, okay, cool.
Yeah, so I got the live stream is up, and also I got the chat working. So the
Okay.
chat's working on the site now.
So
So
it
I'm sorry,
says
Mike. One more time.
So it says Bitcoin open interest climbs to 107.6 billion. Funding rates are positive, pointing to bullish bias as price builds momentum towards potential 73K to 74K levels. Are you
Oh
seeing this?
yeah. So I've been expecting a continued bounce out of digital assets, and but here's the thing: I think that bounce may have run its course. So when they're talking about when you just read there, Mike, how many billions in open interest?
It says 107.6 billion. And I know that in the charts, the past couple of days, you've been showing that bear flag and, in the charts for Bitcoin. And that,
It's looking pretty good.
and
Yeah.
you've been pointing out that level around, I think it was like 54K or something like that.
So really, it's 58K. That's the
Okay.
200-week moving average. Yeah, but the interesting thing for me is that figure that you mentioned of over 100 billion in open interest.
Yeah.
That must mean 100 billion like across all of the perps dexes. That's what that must mean. So for me, when I see the funding rate become extremely positive like that, what that
Mhm.
means is that there are a lot of traders leaning one-sided. They're all long. They're all long. And so if you want to step in right now and be a contrarian, you can actually get paid to hold a short position. And so that's what I've been doing for the last couple of weeks. I'm
Mhm.
short all sorts of shitters. I'm short Bitcoin, ETH, and Sol, and I'm getting paid to be short, which is pretty cool right now. But that bear flag, I expect that bear flag to confirm and for Bitcoin to break down. So, Chad, Jeff, how's it going, guys?
So,
I, I
oh,
figured
hey,
I figured I might as well bring you guys up. We'll do like one or two more news takes, and then I'll kick it over to you guys. But I figured I'd bring you all up so that you can share in the news fun. All right. So we
what's up, y'all?
got it looks like no major DeFi exploits have been reported in the past 24 hours from verified channels. Those slippage incidents highlight liquidity risks. So that goes back to what we were talking about with that people clicking too quickly. In TradFi, JP Morgan notes diverging ETF flows. Bitcoin IBIT inflows 1.5% assets under management since Iran war start, while gold GLD outflows negative 2.7%, showing shifting safe haven preferences. What are you seeing when it comes to that, David?
Yeah, so here's the thing for me. I'm watching the bond market because that's really the smart money. Those guys don't fuck around. And what I see is massively increasing volatility as a result of, maybe you could blame it on the war, you could blame it on crude oil, you could blame it on whatever not. But as far as the war goes, crude oil should have a bid for the next several weeks.
Mhm.
because even if Iran is incapable of harassing shipping in the Strait of Hormuz, that doesn't really matter. All those producers are shut in. And so that should remove supply from the market, and that means number go up. So crude oil, I expect to continue pushing potentially, well above $100 before it actually peters out. But the thing that is bothering me the most is bond market volatility. So, I've got an interesting little chart here that I can share just real quick, Mike, if you're okay with that, just for a second, so that we can take a look at this because this is actually quite scary, I think. So
Go
here,
ahead
let
and
me, yeah, let me share this. So let's take a look at this. This that I'm going to bring up onto the screen right now. This is the Move Index. So, oh yeah, thanks. So this is a measure of bond market volatility. Volatility. So,
cha-cha.
so here's the thing, though. Why in the world does bond market volatility mean anything for us as digital asset investors? Why is this important to watch? Well, because this has been extremely inversely correlated with the S&P cash index basically for the last year. And what this is telling me now is which one is correct. Take a look at this. So this blue line is the S&P, the cash S&P, okay? And this candlestick chart is the move index, a measure of bond market volatility inverted. They have been tracking each other since the April 7th tariff tantrum lows. They have been extremely inversely correlated. And now that we're seeing bond market volatility spike, that could mean that the S&P actually really starts to roll over, like really starts to motor to the downside. So here's the S&P cash index. Let me just go ahead and remove
It
that.
looks like it's hitting that, what, 200-week moving
That's the
average?
200 day. Yeah, the 200 day.
200 day.
So we're sitting, just above the 200 day moving average. And, for me, if this 200-day moving average fails, what does that mean for Bitcoin? Bitcoin today getting rejected at resistance, just basically popped up to resistance, said hi, got rejected, and, moving lower. Same thing with ETH, up to resistance, getting rejected. Same thing with Solana, weak bounce, getting rejected. So we've got to watch these much larger asset classes to get a sense for what could happen for digital assets moving forward. I am short,
Nice.
very
All right.
short.
Let's see. All right, let's pop over to here. Well, let's do one more, and I'm gonna go ahead and just early kick it over to you guys because there's a lot that you guys are going to be talking about. Looking over the David's notes as far as questions and stuff like that when it comes to what OpNet is building, and it's very unique. So I want to make sure that you guys have plenty of time. So you'll have about an hour, hour and a half. But the last one I want to hit is just the macro because this is so important to all the markets. So oil holds near $100 a barrel on ongoing Middle East tensions, but de-escalation signals ease some pressure. The Dixie, the DXY, the dollar breaks above 100. The 10-year yield climbs over 4.2%. So just really briefly, David, can you kind of explain, the impact that oil and the Dixie and things like that have on the overall markets and especially risk on assets like crypto.
Sure. So, with crude oil pushing sharply higher, that's going to push up inflation expectations. And so, if inflation expectations are going to be pushed higher, then you would expect yields to also push sharply higher. So, that's why I think we're seeing yield on the 10-year, push back up above 4.2%. And it looks as though we get above 4.3%, and there is no resistance until 4.6%. So that is a really, really big move out of treasuries, out of yields. So we've got to watch rates. And the reason why rates are so important to watch here, Mike, is because the marginal buyer of treasuries is this Cayman whale. And it's starting to become the Fed itself. The Fed is starting to have to monetize all of this deficit spending. And that is inflationary also. So if we see rates pushing higher, then we should expect the dollar to also push sharply higher. So here's the dollar, DXY, referred to as the Dixie. And if we just take a look, see this level of resistance? Let me just go ahead and mark this. You see that? Resistance once, resistance twice, resistance 3 times, and sitting at resistance a 4th time. Now, the more times a level of support or resistance gets tested, the more likely it becomes that it breaks. And you get past that 3rd test, usually by the 4th or 5th test, you start to see a breakout or a breakdown. So here it looks like we're about to see potentially a breakout in the dollar. And that would be because we're going to see potentially a breakout in yields as we watch bonds and notes move sharply lower. So remember, treasuries are inversely priced with yields. So, price of a treasury asset moves inversely to its yield. So whenever we see yields push higher, like we're seeing on the 10-year, we should see bonds, notes, bills push lower. And all of this makes the dollar more attractive. So we should see the dollar continue to break out. What does that mean for digital assets? If the dollar becomes more valuable, that should be negative for digital assets. That's why I expect this bear flag out of Bitcoin to confirm and for Bitcoin to move down to 48K over the next, 8 weeks or so.
Awesome. Well, let's go ahead and end it there. And I'm going to go ahead and kick it over to you, gentlemen. But right out the gate, I want to introduce Chad, one of the founders of OPNet. Danny wasn't able to make it. They, I'm sure, are busy, busier than one-legged man in an ass-kicking contest over there with the launch coming on Tuesday. So, Chad, do you just want to, quickly introduce yourself and, in your project?
Yeah, 100%. You guys can hear me all right?
Oh, yeah.
Yeah.
Excellent.
Sounds good.
Yeah, Chad, one of the founders of OPNet and MotoSwap. And yeah, I've been a crypto holder, Bitcoin holder specifically since 2017. Been trading pretty actively for the past 5+ years on chain. And then a few years ago, we started really kind of experimenting with building within the Bitcoin space, the Bitcoin ecosystem. We kind of built up our network and a thesis around Bitcoin. And we were really looking to invest in emerging Bitcoin DeFi opportunities. And it became increasingly clear to us as we kind of scanned the landscape and did our own research that no one was building what we really wanted to see, which is true DeFi on Bitcoin layer 1. Everyone was building these layer 2 solutions that required these bridges. None of it really made a lot of sense to us. And so being like early adopters of pretty much anything that's emerging, that's really where, because I'm not like an educated trader by any means, we try and get to the place where people are going to trade before other people are there. And that's really our edge in the market. So we were really early to like Bitcoin ordinals, for example. We were tracking the Taproot upgrade on Bitcoin, looking for the smart contract functionality that some news articles that I was reading said that it was going to provide. And so we were in late 2022 tracking the Taproot upgrade, seeing what people were going to build with it. And that's why we came really, really early to ordinals. And we were early in that ecosystem, but it became really clear to us that also wasn't the right approach to really bring sort of the DeFi on Bitcoin or programmable Bitcoin environment that we really wanted to see. And our network was large enough at the time where we were really lucky to be able to connect with the right developers and really kind of build our early team out. And also started a really, really vibrant and active community that has sort of been with us for a number of years now as we've been kind of building in public OPNet, MotoSwap, and kind of all, now it's a ecosystem of over 300 different applications that are planning to launch on Bitcoin layer 1 very shortly within the next month. So we're that's sort of a quick, and obviously love music. I play music for fun, and I saw some people were shouting at my Slipknot shirt. Excellent music, guys.
And the guitar line in the back.
Yeah, I know, right? That's pretty cool, man.
Oh yeah.
Yeah. That's awesome. So here, Jeff, let me just start it off real quick. I've got a bunch of questions that I want to ask Chad, but really, Chad, I want to start off here. You talk a little bit about this Bitcoin-centric universe, right?
Yeah.
So your ultimate vision is a Bitcoin-centric crypto universe where you've got this global programmable financial infrastructure, but it settles directly on top of the world's most secure ledger. That's the Bitcoin layer one.
Yeah.
So here's the problem though, given how fiercely protective all those Bitcoin core developers are of block space, how much pushback are you getting from the community regarding OPNet's heavy data availability footprint on the layer one?
Yeah, no, I mean, I would say that there's definitely pushback. I think that's especially when are thinking about it in the abstract. If you're a very, very hardcore believer that Bitcoin is only supposed to be used for this one very, very narrow use case, which is I pay you for bananas or whatever, then yeah, you're very protective of this block space. But it's sort of that mindset is a very emotional mindset to have, but it really breaks down if you follow the logic all the way for a number of different reasons. One, Bitcoin is at maximum 6,000 to 7,000 transactions per block every 10 minutes. So if this is supposed to be the place where the entire world is transacting, and the fiat system is going to zero, then how is the entire world going to transact on this network? And that's why you have stuff like the Lightning Network, for example, which does a good job of scaling this specific use case for Bitcoin. But then it also begs the question, you have this immutable, most decentralized, secure ledger that needs transactions, and there's the ability to make transactions. And as long as you're making valid Bitcoin transactions, consensus valid Bitcoin transactions, there's nothing that stops people from doing whatever they want with that network. And I am not a huge proponent of just blindly spamming the network with monkey JPEGs and stuff. That's not sort of my vision for where Bitcoin or what Bitcoin should be used for. I think that there's a lot of really excellent financial tools that you can build for more native use cases of Bitcoin to make it better money, right? Money is not just something that I buy bananas with. I can purchase stocks and take out loans. There's a lot of financial tools available to me in the fiat world. And again, Ethereum has shown that some of these financial tools that exist in the TradFi world, as we say, can be put onto a blockchain system in the form of decentralized finance. In my opinion, there's really no reason why Bitcoin shouldn't be the home of decentralized finance, given the fact that Bitcoin is arguably the only truly decentralized blockchain out there. So it seems to me like it makes intuitive sense for that to be the home for like high value decentralized finance, especially when the scale for payments has already been solved with the Lightning Network. And so if you're very, very focused on Bitcoin being used as money, the Lightning Network is a great tool. And I think that actually our use cases that we're bringing to Bitcoin will drive adoption for the Lightning Network, because a lot of users may get priced out of the layer one transaction fee market because there are these high value transactions happening on layer one, interacting with financial tools that are built, and payments get moved to the Lightning Network sort of as they were meant to. And then you have this kind of symbiotic relationship between people who want to use Bitcoin as payments, adopting and expanding the Lightning Network, and layer one use cases, which say, hey, this is a place where anyone can build financial tooling permissionlessly for anyone who holds the Bitcoin asset to be able to use their money better, right? It's about freedom, in my opinion.
Yeah, man, I totally agree with you. And Jeff, I really want to, throw it to you, but I've got a follow up real quick, man. So here's the thing. Chad, you've publicly argued that holding or hoarding Bitcoin passively, it starves the network of fees, right? And the network needs fees to survive. But how do you respond to, traditional Bitcoin maximalists who view that fee pressure that will likely be generated by OPNet's, high frequency DEX trades on MotoSwap? How do you respond to those people who say that that's actually a bug rather than a life-saving feature?
Well, I mean, I would push back and point them to Satoshi Nakamoto, who the entire incentive structure of Bitcoin works where fees are supposed to subsidize miners long term. I mean, that is the entire the entire design of Bitcoin is that every 4 years, the amount of Bitcoin per block gets cut in half through the halving rate. This is a cycle that is baked into Bitcoin. It's a feature of Bitcoin. And the proposal from Satoshi Nakamoto is that there will be incentive to make transactions on the layer 1 Bitcoin network, and those fees over time will subsidize Bitcoin miners. That is how Bitcoin is supposed to work. Not to dive super deep into Bitcoin's history or rehash any sort of political battles that have been fought over Bitcoin over time, because Bitcoin has shifted and evolved in terms of how Bitcoin looked from a purely code perspective. But they limited the size of the Bitcoin blocks in the block size wars, and they capped them. And they didn't increase the block size on layer 1 Bitcoin, which I'm not saying was a bad thing by any means. They opted for something like the Lightning Network to be the solution for scalability. But it does beg the question, if now no one is incentivized to make transactions on the layer 1 Bitcoin network, what happens when the last Bitcoin is mined? What happens in 100 years? How are miners going to be securing how are miners going to get paid for securing the Bitcoin blockchain? And I've heard arguments all across the board. I've heard arguments from people that say governments are it's going to be such an important asset to governments that they're just going to mine Bitcoin. I think that's sort of like a very bearish future for BTC if we're going to be relying on governments to be subsidizing Bitcoin mining. And I think that existential threat to Bitcoin is not 100 years threat. It's a 1 or 2 halving cycle threat, because if Bitcoin doesn't double in price by the next halving cycle, then any miner who set up an operation now all of a sudden becomes incredibly unprofitable. And let's just say electricity cost just continues to go down. And there is this, that's the other argument I hear is, well, it'll be so cheap at some point to use electricity that will keep up with the value of the economic incentive for Bitcoin mining. It will level off it somewhere, but I simply don't see that as a reality, and I'm not willing to stake Bitcoin's future on that. I think that there should be a reason why people make transactions on the Bitcoin network. The network was designed to be used, not to be hoarded. There's no mention of digital gold in the white paper. It's not built to be this store of value asset, even though it may function as one. It's not built to be a store of value asset. The network itself is built to be used. And so, I think that our position is we build a use case. We build actually a platform where anyone can build a use case for Bitcoin fully permissionlessly, and really allow the market to decide what are the best use cases for Bitcoin, what are the best use cases for using the Bitcoin network. And if someone's able to develop an application that drives transactions on layer 1, it's all about incentives, right? It's the exact system that Bitcoin was sort of built on.
Love it, man. Yeah, Jeff, what do you want to ask of chat?
Well, I came across this project about a little over a year ago because I do a lot of airdrop farming and research into early projects before they launch, just trying to find out what's coming down the pike, and seeing that this was having native DeFi built on Bitcoin. I mean, it really perked my ears because there's nothing like that. And we've all been looking for this use case and utility on Bitcoin besides it being this store of value, even though it, like you said, it's in the white paper, it doesn't say that at all. It's a peer-to-peer electronic cash payment system, that doesn't need a bank or intermediary. And a lot of people forget that. And so, it was really interesting. And then seeing how you guys rolled out these campaigns throughout the year where you do certain tasks like swapping, providing liquidity. And I love those aspects of the test net. You can go in and break stuff and mess around without the fear of losing your own hard-earned money or tokens. And I tell people all the time, if you want to learn, the testnet environment is the best way to learn and get your feet wet. So, you don't, because we've all sent money to a bad wallet address, or I know Mike has sent some to the Genesis wallet and other tokens. So it's painful. You don't want to do that. So yeah, seeing this. So what was your approach to starting this whole, campaign and the testnet and getting people involved? Because you get points for doing all these tasks, and you mint the NFTs as like little badges. So, What was your approach to kind of getting people involved and getting the excitement?
Well, we worked with Galaxy, which is like a really excellent kind of campaign platform that allows you to help basically build out these campaigns. And we've got really, really competent people on our team who kind of helped to organize and build out these campaigns and really worked meticulously to make it a good experience for the testnet users. And it's really, really important for us that every aspect of OPNet got tested. Every piece of infrastructure that we built, every piece of the application side that we built was meticulously tested. And it was really, really helpful because, we got multiple protocol audits. Like safety and security is such an important thing for us. We spent a huge amount of the money that we raise on audits and security. So that's super, super important to us. But there's nothing like testing things live. And I also think that there's sort of a double incentive, which is that people who are testing and using the protocol on the testnet immediately have a user experience advantage. And also they have edge and alpha in the market, because while the rest of the market who are unwilling to kind of get their hands dirty in a testing environment start to see, oh, there's a token I want to buy. Oh, there's a protocol I want to use. Oh, there's a new application. Who's going to really have the edge in that scenario? It's going to be people who have been testing and who are very familiar with the experience and who have been doing it for a very long time. So that's sort of been our approach. We are very lucky to, OPNet itself is an open source protocol. It doesn't have a token. We didn't build it with any native value accrual to us. Our position is that we build applications, we build infrastructure around this ecosystem that we're creating. And that aligns incentives, in my opinion, towards protocol adoption. We only win if the protocol gains adoption. And so on that note, we obviously have MotoSwap, which is a DEX that has its own token that you essentially stake and you earn fees from the DEX. It's like uni token with the fee switch on it instead of having this like DAO aspect. And then we partnered with the Orange Pill project, which is going to be the first OP20 token that offered some airdrop rewards to the testers and kind of to reward the community and kind of like build that early community. It's also going to be a really cool first use case token because there's DeFi staking and liquidity farming. There's a DAO aspect to it. So there's a lot of really cool use cases that will come out of that token as well. So that's sort of been the full scope of what the testnet environment looks like. It's a little bit different than other, airdrop farming projects, but this project in and of itself is completely different than any other project in the crypto industry, mostly because there's not a protocol token, and I think that it's one of the worst pieces of this industry is the fact that every major project launches its own native token. I think that it creates this misalignment of incentives for not only the team, but also the community, that this is the only industry where teams raise money and their exit is the day they launch, right? If you're thinking about the traditional world of like Silicon Valley startups, you don't exit as a startup founder until you have built something very, very competent that has a ton of adoption, and you exit years. The timeline for exiting has actually gone up and up over time. It's like a 10 to 12 years span for founders to actually exit their Silicon Valley traditional tech style startups. In crypto, it's totally different. These projects will raise $50, $100 million, and then they'll launch a product that really no one uses, a new L1 blockchain or whatever that nobody uses. People will farm these sort of airdrops, but nobody has any faith in the project. The use case of whatever they're building is fairly dubious. So anyone who's farming the airdrop just sells it. There's no real attachment to the project, and the founders will typically exit literally as soon as they possibly can. And then that's how you end up with, I think this past cycle was a huge example of it, where you had basically no alt aside from maybe Hype that really performed well. And Hype was kind of the antithesis of exactly what I'm talking about here, where they sort of had a more organic growth. They built something that gained adoption and their token performed versus, I don't have to name any names, but we all know the, 60, 70 different highly funded projects that came out this past cycle that essentially none of them performed, and all of them just look like down only. And so we don't need a token for OPNet. Bitcoin is the token for OPNet. The value accrual, the idea of the protocol is that Bitcoin is the fattest protocol that exists. It has all the users, it has all the liquidity. All of the value should accrue in the apps and assets that are built on Bitcoin. The thing that allows that value transfer should not accrue any value itself. It's this sort of, we call it the Bitcoin fat app thesis. And it sort of is in relation to the internet protocol, for example, like TCP/IP or HTTPS, right? These are open source protocols that allow for value to be created from the concept of the internet. All of the value flows into the applications and that are built leveraging this technology. These open source pieces of technology that sort of make everything happen don't have any inherent value themselves. So it makes the ceiling for value to be created effectively limitless. And that's really how we want this protocol to be seen and viewed.
Got it. Chad, I've got
real quick. You know, I've been involved in like all these airdrops, you know, past 3-4 years that just basically give you dust, and the team just up and disappears and the protocol dies. I mean, I can't count on two hands or more. I need more than two hands to count how many projects have just kind of vanished or sunset, you know, their project. And these chains that only generate like $10 in value, but in a day, and their valuations at, you know, millions or billions of dollars. And you're like, well, what's this token actually providing value for? Like, what's it doing? And the founders up and go, and they're like, yeah, well, it was nice working with you guys. So, and that's a good point. And yeah, the Moto swap thing, I wanted to ask you real quick, like the Moto Chef, I know that was a separate kind of thing for yield farming, and you guys just had merged it into Moto Swap. I like that it's all in one place because you don't have to go to a bunch of different locations, and it's all easy to kind of go through in the dashboard. And going through the quests and campaigns that you guys offered, you know, step by step, is pretty easy to deploy a token, deploy pools, adding liquidity. So it's a very nice interface, easy on the eyes, and you don't want something that's kind of gimmicky, like some other projects that we've voiced concerns over in the past. They just look kind of hokey, and this is nice and clean and easy to navigate. But yeah, go ahead, David.
We initially had it where, it was farm.motoswap.org. It was, the idea of the farm is that it's essentially a fork of the Master Chef contract, the Sushi Swap Master Chef contract, which is why we called it Moto Chef. But we inevitably just merged it into because exactly for what you said, the user flow, it's much cleaner, it's much easier to use, and it's all right there for the user. You have the ability to launch your own yield farm, your own token, which was like beefy.finance, if you remember. That was sort of the launch your own yield farm sort of thing way back. On Binance Smart Chain, I think it was, but we sort of merged all of the functionality that we built out for MotoSwap onto just the one site because we feel like it'll be an easy one-stop shop for anyone who's trying to get started on trading on Bitcoin or launching their own asset.
Gotcha. Yeah. So, you know, Chad, I'd really like to learn more about how OPNet actually makes money. Like how do you and how does OPNet make money? So I've got a question about MEV. Maximal extractable value. So, you know, your architecture at OPNet prevents layer 1 miners from executing MEV by decoupling transaction inclusion from the execution ordering itself. So instead, these priority fees are pooled and trustlessly distributed to the OPNet node runner, who then solves the epoch's cryptographic puzzle. So how do you ensure that this doesn't simply shift the centralization of the MEV extraction from Bitcoin miners directly to dominant OPNet node runners?
Okay, great question. So actually, OPNet node runners are not able to. OPNet node runners are viewers, right? They're viewers of the layer 1 network. They are not themselves the ones submitting transactions for you, and so it doesn't work like an ETH validator, for example, right? Where you have like they're nodes, but not in a traditional sense as they're typically understood, right? I'll go through the flow here. You are using OPNet. What does that actually mean? You're just making a Bitcoin transaction that has smart contract interactions or smart contract deployment embedded within that transaction. OPNet nodes are just indexing and reading the Bitcoin blockchain, as soon as a block passes, they're looking for anything that's smart contract related and then executing locally and across a peer-to-peer network of these nodes. So they're never able to reorder transactions. Everything is mathematically deterministic on Bitcoin, and then executed in the exact same way with mathematical determinism across the OPNet nodes. So they have no ability to change or reorder transactions. In fact, if they did that, their local state would be in direct conflict with the mathematically deterministic state that's available to view on Bitcoin, and they'd be immediately kicked off the peer-to-peer network. Their cryptographic hash would be in conflict with all the rest of the OPNet nodes. They'd be immediately kicked off of the network. So they are not able to reorder transactions. In fact, the only vector for MEV is user math, which basically says, I see a transaction within the Bitcoin mempool that is doing X, Y, or Z, and I'm able to submit a transaction onto Bitcoin that has a higher priority fee than that person. And that environment is super clunky and will not result in anywhere close to the type of MEV that you may or may not see on an ETH or Solana-esque blockchain, where validators or, previously it was miners were able to run their own local copy of the blockchain and then get their transaction in before yours. And then you really can't do anything about that. In fact, even on Bitcoin, you have these native Bitcoin functionality, like something like replace by fee mechanism, which basically says that you're able to replace your transaction, submit it with a higher fee in the Bitcoin mempool. And when you do that, you can submit with a higher priority fee as well. And if someone is front running you for whatever reason, you're able to resubmit your transaction into the Bitcoin mempool as long as the block hasn't confirmed, and front run the person who's trying to front run you, essentially. So I think that there's going to be a lot of tooling that comes out for this stuff. There's a lot of really cool things that already exist on Bitcoin, such as like private mempool relays, or shielded transaction submissions if you work directly with mining pools to get your transactions through. And so there's going to be a market for a lot of this stuff. And that's, again, it's partially what we're building here with OPNet, is that we're not providing all of the products to the market. We're providing a protocol that creates demand for a lot of these products to emerge. And as soon as there's demand for it, someone will build it.
Gotcha, man. So
Yeah,
I've got a follow up to that, because I'm trying to understand how it is that OPNet and you, as one of the core devs, are actually able to make money from this. And by the way, congratulations on your funding round. That's a big deal. For my research says that you were able to close a funding round led by Further Ventures, worth $5 million.
Yes, that's right.
Congratulations, man. That's awesome.
It was an equity fundraising round, and we built a company that is like aside from OPNet, that effectively builds infrastructure for Bitcoin. So we built essentially all of the tooling and products that Consensus has for Ethereum. So we built Block Explorer, we built charting, we built like an Infura sort of product. We built our own wallet as well. Any Bitcoin wallet works, but we built our own DApp compatible, quantum resistant Bitcoin wallet that we think is an excellent product. And so these are some of the pieces of infrastructure that we've built. We also built, obviously, MotoSwap as well, which is a DEX application. And we'll continuously build new infrastructure and applications out of this company that are all revenue generating. But again, importantly, the incentives align for us and for the market, which essentially say, we only make money off of our products if the protocol gets adoption. And that, I think, is the right way to build a startup, because there's no exit without having a bunch of success. We don't have success unless the protocol itself has success. So that is sort of how we structure this. And I think actually really the VC world around crypto is going to start evolving more towards these equity-based companies that look actually a lot more like traditional tech companies, which really, aside from the fact that we are building technology for blockchain, we are really a tech company at its core, because we're building tech products, and these tech products plan to make money. We're not charging builders to use OPNet. There's no OPNet token, and those are things that will always be the case.
Yeah, so I mean, the whole revenue thing, like that's important, right? Most of these protocols don't actually make any money. It's like
Yeah.
they're businesses that usually don't make money. Kind of funny, but yeah, Jeff, go ahead.
Is that whole reorganization protection aspect was that designed out of the MEV protection stuff, or where you have to choose 1, 2, 3 blocks reorganization, and yeah, what was kind of the goal for that? Because I've never seen that before in any protocol.
Yeah, so because this is a proof of work blockchain, right? You have a different sort of finality than you have with something like Ethereum. Finality on a proof of work blockchain, I mean, theoretically, you could have a 10 to 20 block reorg. It hasn't happened in like 15, actually a more than 3 block reorg, I don't believe has happened in well over 10 years on Bitcoin. But you have when a block is confirmed, it's not the exact same as like Solana or Ethereum, where the block confirmation is 100% finality. You have theoretically the risk of a reorg between 1 or 2 blocks. Now, when this kind of dives into some of the really core pieces of how we had to build out this protocol, because we're not looking to change Bitcoin's code, because this protocol sort of plugs directly into Bitcoin, we are not changing how Bitcoin works at a consensus level. And so we have to sort of work around some of Bitcoin's features. One of the things that can't happen that we designed for OPNet is that the smart contracts themselves are not holding Bitcoin. Like, we're not turning Bitcoin itself into a programmable asset. We're turning the Bitcoin blockchain into a programmable blockchain. But we're not turning Bitcoin itself into a programmable asset. What does that actually mean in function? It means that, and I'll go to Ethereum because it's an easy parallel here. Ethereum has native wrapping contracts, meaning that when I make a swap or I put Ethereum into a Uniswap LP, for example, I'm not putting ETH, the asset, into that LP. I'm putting wrapped Ethereum. And they have these native wrapping contracts that are built into the blockchain. So what is in smart contracts is actually ERC20 Ethereum. ETH itself is not an ERC20, but ERC20 Ethereum, which is a smart contract version of Ethereum, is what's in these smart contracts. So you have that function on Ethereum. You don't have that function on Bitcoin. And you would need a change to Bitcoin's code for something like that to really be functional. You would need like a covenants opcode to be enabled. Something along those lines would make that possible. But because we're not pushing for any sort of change to Bitcoin's code, we built around that. So you have two sorts of, just speaking specifically about our DEX, because it's an easy example. You have two sorts of swaps on our DEX. You have OP20, OP20 pairs, which function just like Uniswap v2, where you have the smart contract holding both assets. They're normal pairs. It could be stablecoin and token. It could be wrapped Bitcoin and token. It could be token pairs, whatever it might be. These function just like any other smart contract-based asset. So if you have a swap and it reverts, your money is refunded back to you. It's standard for a smart contract environment. The difference here is that Bitcoin itself is, one, not programmable. Two, a Bitcoin transfer is not something that's able to be reverted. And three, Bitcoin itself is held by these smart contracts. So how do you build a swap, for example, that still functions just like a DEX swap that's trustless and pools can move like X times Y equals K, but also has works around these limitations. So we built Native Swap, which is the first thing of its kind, which essentially allows the user to, I'll break it down in this way. Native Swap has liquidity pools, but they're single-sided liquidity pools. It is, just say I have Moto token, the DEX token. That is in the liquidity pool. The token is in the pool. On the other side of the pool, you have virtualized reserves of Bitcoin to be able to accurately move the price of the pool.
So hold on a second, Chad. Hold on a second. Virtualized reserves of Bitcoin. What exactly does that mean? Can you drill down on that for a second?
It basically means that there is a theoretical amount of Bitcoin in the pool, but the Bitcoin itself is not in the pool. So this is where the reservation system comes in. So when I am buying from a native swap pool, the people who provided liquidity are actually essentially either it could be liquidity providers or they're sellers of the token. Tokens go into the pool. Then me as the buyer, when I make my buy, it's a two-step process. What I'm doing is I'm first reserving a slot. And so however much Bitcoin I'm trying to buy of this token, I'm essentially taking that chunk of virtual Bitcoin and taking a slot of it, however much, $1,000, let's just say, and that slot all of a sudden, as far as the pool is concerned, that's now real Bitcoin. And then I have the ability to, as soon as that transaction is confirmed, that slot is now reserved for me, the person who wants to buy. I actually execute my buy. I send my Bitcoin. I make a Bitcoin send transaction. This transaction, because of the first step, which is the reservation, is now not revertible. The tokens have been reserved at that price that I reserve them in the liquidity pool, and the price of those tokens is still abiding by the X times Y equals K formula because of that virtual reserve of Bitcoin that's in the pool. This is not like it's wrapped Bitcoin in the pool. It's not actually really Bitcoin. It's specifically for the pricing of the pool to be able to move. And for me as the user, when I want to make that buy, I'm making that virtual Bitcoin actually real with my own BTC. And so the contract is never holding Bitcoin. What happens when I actually execute the swap, it's like I make a send, the contract sees the Bitcoin moving. Another really key aspect about OPNet is that all the smart contracts are aware of all UTXO states at all times. So Bitcoin moving can trigger smart contract actions. And that's how we do a lot of the smart contract related functionality when it comes to native BTC without needing the smart contracts to hold Bitcoin. So when I make my swap, I am making a Bitcoin send transaction. On the back end of MotoSwap, it's all about transaction crafting within the wallet and the front end, in the back end of the swap. So the transaction, the Bitcoin is then split into a bunch of UTXOs, depending on how many tokens I want to buy from the pool, how many providers are in the pool. There's a queue-based system within the pool on the single-sided side that says, okay, let's just say I want to buy $1,000 worth of Moto token, and there are 3 providers in that pool, and across those 3 people, they each have X amount of Moto provided in the pool. When I make my buy, the transaction crafter is splitting the UTXO of that $1,000 worth of Bitcoin and sending, according to the amount of people who provided liquidity into the pool, the accurate amount of BTC. And in that same transaction, the amount of tokens I wanted to buy from the pool get automatically sent to me as the user. So it sort of works a little bit more like Uniswap v4, although it is sort of this novel construction.
Yeah, so you've kind of like built hooks on top of X times Y equals K. Kind of, sort of.
Yeah, exactly. It's pretty much exactly what it is. Again, there's never been a DEX like this before, but this is the way to execute fully trustless swaps on Bitcoin without requiring any custody, without requiring any bridging. And what it allows for is a lot of really cool things. So for one, I can have a Oracle-based pricing pool for like stablecoins, for example, where the price of the pool, it's single-sided of stablecoins within that pool. Now I can swap my Bitcoin for stablecoins fully trustlessly. It's the first time you'll have access to doing this all on layer 1 Bitcoin. So there's a lot of really cool functionality that's enabled by this. And this sort of Bitcoin is not held by smart contracts model that we have can be leveraged to do a lot of really, really cool things that are not really functional on Solana or Ethereum in terms of how you're designing your application and how your smart contracts are interacting with Bitcoin. Another interesting thing that we created is the proof of HODL staking, which we can maybe get into a little bit later. I've gone into the weeds with how native swap works.
Well, so I want to follow up on the security aspect of this, because this is a novel mechanism. So, your core smart contract runtime, OPVM, I believe the engine's called, was audited by Verichains, right?
Yes. So first Halborn and then Verichains.
Gotcha. So, given the novelty of running this WebAssembly engine, you're running it deterministically on top of Bitcoin's layer 1. Yep. What were some of the most challenging attack vectors or maybe vulnerabilities that the auditors flagged before you're ready to deploy to mainnet, I believe on the 17th?
Yeah. So,
and are those audits available to view?
They are. They're going to be published before we launch. We have gone through many rounds of audits, as you can imagine, building this tech. I mean, it's literally millions of lines of code that were audited across the entire protocol, and also MotoSwap itself is an application, and the wallet. All of the pieces of our infrastructure have been really thoroughly audited. We chose Verichains because they are uniquely positioned. Unlike some other audit firms, and this is not to talk down on crypto audit firms by any means, because there's a lot of really good actors in the space, but you pay them X amount of money and their core business is, oh, I'm auditing smart contracts. They'll do their job, but they are not, okay, I'll say it like this because I don't want to make anyone upset. Verachain does government level security as their main business. Like the smart contract auditing as a business for them is one of their verticals. They're very, very good at it. They work with the top crypto exchanges in the world. They work with a lot of top protocols and blockchains. They also do security for governments and major institutions. And so they also run a huge infrastructure of developers, dev shop. They have a huge pipeline across Southeast Asia of the smartest minds, like the smartest minds across basically the entire continent. So when it came to finding an auditor who we really trusted to not only give us an AOK on the protocol, but to really tear the protocol apart and actively work with us to tear it apart, piece it together, and make sure that there's at least limited attack vectors. Now, again, I'll say anything critical that they found, we obviously acknowledged and fixed, and we have them on contract to red team our protocol and make sure that they, we're providing the level of security. And I mean, there's no 100% guarantee ever in the industry. No one can make any guaranteed promises, but it was a huge part of our protocol development, to be honest. And we actually delayed the launch of the protocol 4 or 5 different times because we just wanted to ensure that all the pieces were as sound as they possibly could.
Yeah, man. So one thing for me, whenever I'm taking a look at a new protocol is, people like to say trust but verify. I like to say don't trust, instead verify. That is super important. So, I want to give you an opportunity now to clear the air, because there's a lot of people on X right now that are talking about Lucky Coin and Board and these cats. And so I just want to give you an opportunity to clear the air around that. And let me just ask you one question about this. So, OPNet, it heavily promotes this Bitcoin ethos, right? Of verify, don't trust. But there are still these lingering community accusations regarding, potentially undisclosed self-minting of assets by the founding team, including Board and other assets referred to as quote unquote cats. So just for the sake of transparency, can you state clearly on the record today what the team's policy is on self-minting and clarify so tell us about that.
Yeah, so there's 3 things you mentioned. The first is we launched a ordinal collection called the Moto Cats that was an open mint for anyone it minted out in 24 hours. Again, transparently, the blockchain is a fully transparent system here, so anyone can go and verify this themselves. But there was no, major self-minting by the team. We didn't mint, I wouldn't say any majority amount of the supply ourselves. There was a percentage of the supply that was held for the team. And so, again, I personally can't control what maybe some community members or marketing people on our team, maybe they minted some cats themselves, but importantly, everyone paid for their mints of these cats. And I also know from knowing all of the wallets when people register for airdrops and stuff, that the distribution of the cats is extremely wide across our community. I think people maybe who are looking at it from the outside downplay the fact that we have a community of 10,000 plus who are extremely rabid and are extremely strong in terms of their backing for us. And another really important element of this ordinal collection is that you hold the cats to get an airdrop of Moto upon launch. So some of the FUD around this has been, why is there only 200 cats listed on marketplaces out of a 10,000 collection? The team must hold 90% of the supply. No, it's everyone who's holding the cats is holding it because they're holding it for the airdrop that they're getting upon mainnet launch. So no one sells the cats, not because there's some crazy amount of supply control by the team, but because they're holding for this airdrop. I mean, if you're part of the community, you understand this, it's obvious to you, but I guess maybe sometimes looking from the outside, that can seem like, well, there can't be any other explanation. The team must hold all these cats. Again, also importantly, that was a vehicle for raising some funds for MotoSwap's development. The cats were minted at $50 and $100 in different tiers per cat. So, I mean, again, like, I didn't have $1 million on hand to mint the entire supply of the cats and then just give them to myself. So I would say that's the policy. I can't tell you that we had an internal policy that nobody is allowed to mint cats who's on the team, but there wasn't some sort of 90% team supply mint. I mean, again, you can be part of our community and you'll understand. There are people on our team there are people in the community who spent thousands and thousands of dollars minting these cats. Some people minted hundreds of cats themselves because they're super, super strong supporters. And so, yeah, that's regarding the Moto cats. In regards to board, it goes even further back, all the way to late 2023, early 2024. OPNet was born out of a different community, which was the MotoSwap community. And we were experimenting with trying to create a DEX on Bitcoin early on. We had a really strong community. Community took over a BRC20 token that rugged. So there was, to give you the very, very short TLDR, us and a bunch of other people in the Bitcoin community bought a token on Bitcoin called Oshi, which promised to make Uniswap for BRC20s. That actually was a total scam, rug. And we decided, because this is just something that myself and Danny, my co-founder, have sort of always done. We were always really into being part of the community and working for our bags. And whenever we got rugged on a meme coin or something on Ethereum, we would always do our best to try and take over the community and work to, if we saw that there was something there, work to be an active part of it. And so we decided to take over. We had the resources at hand to be able to find some developers to try and build this out, right? So we built out sort of a proof of concept standard on Bitcoin called CBRC20, which was built on top of ordinals. And our idea was that we would build the smart contract functionality into the indexer side. So not put the smart contracts on chain, but build the smart contract functionality onto the indexer side. And we actually had a working proof of concept. Board was the first token that minted. It was an open free mint. I didn't even mint any of it myself. It minted out. It was launched while I was sleeping, and it minted out before I even woke up. So I didn't even mint any of it myself. There was a large community of people who minted it. Importantly, though, once we realized the fragility of what we were building in terms of building the smart contracts onto the indexer side, this was just a really bad design. And the most important thing is that we were using ordinals as our base in order to actually build out this tech. And the ordinal protocol itself is just really poorly designed. So we decided that we would scrap everything, start from zero, and build a fully open source, fully smart contract-based protocol that was completely independent of ordinals and fixed a lot of the problems with ordinals in a lot of ways. What we did with the assets in that community were that we migrated them over to OPNet, so to OP20. So Moto token existed then, and it's migrating to OP20 as a standard. And we ran a campaign with the Orange Pill team, which will be the first token on as an OP20, to be able to burn your board tokens and earn some Orange Pill tokens.
I understand.
So
that makes sense.
It's really important for us to make sure that we're not like abandoning anyone who has ever supported us. And so, yeah, there was, again, a lot of FUD comes from people who haven't been part of it. If you actually ask members of our community, they'll tell you the exact full story, because there's never anything that we're doing that's like obfuscated. Like, we're very, very public. We're very outspoken. And we always try and do right by the people who are with us. And again, we have had such a strong community for a long time because we wear our hearts in what we're doing exactly on our sleeve. And so, the last thing is Lucky Coin, which was a token that was launched in like 2012, 2013. We were actually mining fractal Bitcoin at the time in mid 2024, something like that. Fractal Bitcoin is a fork of Bitcoin that was launching as sort of like a layer 2 for BRC20 sort of activity. And because OPNet actually works on any UTXO chain, OPNet is natively compatible as a smart contract solution for any fork of Bitcoin, just like because we built it for Bitcoin, it works on any fork of Bitcoin. So we were testing on Fractal Bitcoin to basically see how it would perform in a extremely fast environment, because Fractal Bitcoin is like hyper scaled BTC. So at the time, basically there was like a group of people who wanted to revive this Lucky coin. We had this mining infrastructure. We helped them set up some mining pools. And then there was like a CTO team that was running Lucky Coin, and that's pretty much the extent of it. Some members on our team had bought the token. We were all, happy with we were just trading token performance, but we didn't run I couldn't have launched Lucky. I was like in middle school, so I couldn't.
I know.
Again, if you actually like think about any FUD that comes our way for like maybe more than 10 seconds, it completely breaks down. But there's always a couple of like really schizo people, especially when you show up as a builder and you show up in a community. There are always people who will hate on you from like anon profile pictures and stuff, but that's just sort of the way it goes. I mean, crypto attracts all sorts of people, including like the most schizophrenic people. And that is just sort of the nature of the beast. And look, there's some totally crazy schizophrenic people within our own community who I love. So it's like, that's just a piece of it.
I hear you.
People like to lump you all together into the same thing and say, oh, well, they were involved in this, running a node or doing something, whether or not you're actually the one that developed it. It's like, okay, guys, we need to really break this down and get some good transparency.
That's the most I could pretty much say. Like haters,
and the fact that you're not launching a token, for OPNet itself, it's not, the protocol doesn't have its own token, so you're not trying to rug people or extract value from them like other founders. And
there literally is nothing to rug with OPNet. OPNet itself can't rug. Like there's nothing to rug. And the software, the protocol itself is fully open source. So going back to sort of your the don't trust, verify, that's a huge part of our sort of mission with OPNet is anyone can run an OPNet node and verify yourself. You don't have to trust anyone else who's part of the peer-to-peer network. You don't have to use anyone else's API. It's an open source client that anyone can run.
That's pretty awesome.
You guys have been running vibe coding campaign recently too. And that's where you're talking about there's over 300 applications that are going to be launched and stuff.
That's
right.
That
built out of that campaign?
Yeah. So a lot of the builders who were building already submitted for that campaign, but basically a month and a half ago, 2 months ago, we started really hammering in on AI tooling. So one of the most important things about building on Bitcoin in general and building this protocol has been, how do you make it as easy as possible to build on Bitcoin? What did we do from a protocol perspective? We recreated all of the transaction crafting libraries, the NPM packages, Ethers.js. We recreated all of these tools for developers that exist on Ethereum. We recreated them painstakingly in a fully native to Bitcoin way for BTC. So if you're an experienced developer, it's super, super easy to get started. If you know how any other blockchain system works in terms of smart contracts, it's extremely, extremely easy to use and build with OPNet. But we wanted to take things a step further. And as skills.sh and Claude Code and OpenClaw started to take off, and we're, again, part of who we are as people, as traders, as builders, is we're always trying to be on the front lines of what's going on. And so we were really early to all of that, and we were implementing it internally on our side, all of our agents, kind of making our team more efficient. But we wanted to develop tooling for the community and for builders to make it as easy as possible, right? Why there's no reason why, if you have an idea yourself, that you shouldn't be able to at least build a proof of concept just purely through these tools that we've built. So we built a ton of MCP libraries for Bitcoin and for OPNet specifically. Actually, Bitcoin itself has not really been hit by this AI boom. And it's not even really because Bitcoin is, it's not impossible for this to happen to Bitcoin. One of the really downsides of Bitcoin is that it's widely undocumented. Bitcoin itself is widely undocumented. There's 80 to 90% of even just the Taproot upgrade that is fully undocumented. Most of the documentation around it is just for the Lightning Network, right? The use cases that it brought.
So Chad, when you say undocumented, what exactly do you mean with that word?
Yeah, I mean that like a lot of the functionality that Taproot really enabled, and just in Bitcoin itself, right? Okay, let's just say I'm building a new blockchain. I'm building a layer 1 blockchain. What do you expect to see? docs.whatever.org, right? And you see a full breakdown of exactly how to build and the entire construction and piece by piece of the entire code base basically is essentially broken down for the user. And so Bitcoin is unique where, yes, you can go and look at the open source code of Bitcoin and the software implementations of Bitcoin. But again, there aren't like very comprehensive documentation of Bitcoin itself, and specifically Taproot, but the entire protocol. And so our developers are some of the best developers in the entire industry. They dug through Bitcoin source code. They dug through the source code of the Taproot upgrade and documented a lot of the undocumented pieces. And what that really allows for is for AI tooling for building on Bitcoin to become extremely easy to not only develop, but also for the users to use, which is how we've been able to develop this ai.opnet.org, which is really what powers the vibecode.finance campaign, which really lets you as a user say, I want to develop literally, you name it, you can vibe code it and it develops it for you. And we have, AI audits, and I don't expect anyone to ship without like a really, really complicated protocol without getting a solid audit yourself. But yeah, this is exactly what it is. His name is Bob. That's the AI that we developed. And
is it Bob in accounting? Is that who it is?
No, he's built on Bitcoin. He's Bob. It's the Alvin Bob. So yeah, he allows you to be able to literally, if you plug him into your Claude code, he literally allows you to vibe code whatever you want. You can develop any application that you desire. There have been people who've created RuneScape on Bitcoin, all the way to people who created invoicing services for Bitcoin, to secure messaging protocols for Bitcoin, all the way to DeFi Ponzi's and stablecoin protocols, and pretty much everything in between. Restaking of tokens for extra yield. I mean, one of the really cool things about Bitcoin is that there is zero TVL on Bitcoin layer 1. And there are also zero applications and there's zero DeFi. So all you have to do as a user or developer is to say, what worked on a different blockchain? How do I build it in a way that provides value to Bitcoin? And that's exactly what OPNet enables. And then we just try to make it even easier for builders. And we saw a huge explosion of builder activity. There was probably around 40 different projects that were building before we released this AI tooling, and it's exploded at like around 10x that.
Dude, that's super cool. So I want to ask you about yield mechanics a little bit here. Yeah. So tell us all about proof of HODL. Proof of HODL. So what exactly is that? And do you think that this is going to be economically viable for retail users, as you should probably expect those layer 1 transaction fees to inevitably rise, right? So what is proof of HODL?
Yeah, so proof of HODL is a Bitcoin staking mechanism that we developed, and it's exclusive to our functionality. No one else would really be able to develop something like this because you don't have smart contracts on Bitcoin with any other sort of Bitcoin staking scheme. We took a look at a lot of the Bitcoin staking schemes that were in the market. We looked at Babylon, we looked at Core. Those I would say are like the primary ones, but there are others that are out there. And so what do? They say, you custody your Bitcoin with them in some sort of multi-signature scheme. Some are more complicated than others, but effectively you say you have shared custody or full non-custody of your Bitcoin. A lot of them will say it's trustless or non-custodial, but that's just simply not the case. And they give you a reward they build a new blockchain totally aside from Bitcoin, and you lock your Bitcoin with them on layer 1, and they give you rewards in the form of their shitcoin, right? That's the model of Bitcoin yield as it stands today. The only other way you get Bitcoin yield is through some complicated financial engineering, right? Your MicroStrategy, varying strategies that they have, which I think are in a lot of ways super, super good, but there's just no there's no yield on layer 1 BTC that doesn't require you to give up custody of your Bitcoin. So we looked at that and said, okay, if all of the yield options on the market right now just look like people who deploy a brand new blockchain with a new gas token, and that gas token is the reward token that people are getting for giving up custody of their Bitcoin. What if you could fully decentralize that process, for one, and two, not require people to give up custody of their assets? So that is where proof of HODL was born from a conceptual standpoint. What actually is proof of HODL? Because the smart contracts on Bitcoin are aware of all UTXO states. They can read UTXO states, and smart contract actions can be triggered by UTXOs moving. We say, when you want to stake your Bitcoin, you send Bitcoin to yourself. You're making a self-send. So it's fully self-custodial. You and your own Bitcoin wallet. You send Bitcoin to yourself. When you make that self-send transaction, you make a contract call to a farming contract, yield farming contract, single-sided yield farming, where that contract is now reading the UTXO in your wallet. It's seeing, has this UTXO moved? As long as that UTXO hasn't moved, you're considered staked. You're accruing farming rewards. When you go to claim your rewards, you're one, unstaking your BTC by claiming the reward. And two, it's verifying, has that Bitcoin moved from your wallet?
So Chad, let me pause you there for just a second. What exactly are the farming rewards?
Oh yeah, so it's like this is still within the MasterChef sort of style yield farming, where you have anyone, anywhere, at any time is able to deploy a yield farm onto Bitcoin of whatever it might be, whatever token anyone wants to launch, and you're able to not only do pool 1, pool 2 staking just like you can on like SushiSwap, but even on Ethereum you had single-sided Ethereum staking for these yield farms. And the way it worked usually is that there's some sort of upfront fee that you pay to single-sided stake your ETH, and you're just farming rewards from this pool. So it's a distribution method, but also it builds liquidity for whatever token is launching. And anyone can do this essentially with one click on Bitcoin now with how easy we've made it. So what are people going to be farming? Anything of really, but it's going to be a ton of tokens. It can be the best DeFi protocol that launches. It can be a total shitcoin. It's up to the market to decide what has value. We just made it extremely easy for anyone to do. So like Moto Swap, for example, the Moto token will have a yield farming period where proof of HODL staking it will be enabled. The PIL token will also have the same yield farming enabled. And I would say 80 or 90% of the protocols or applications that launch that have tokens will likely engage in the exact same thing. When you are setting the pool or creating the pool yourself, you determine what the upfront fee for staking, single-sided Bitcoin staking is. And so again, it's going to be up to the market to determine what's acceptable, but maybe it's 1%, maybe it's 0.5%, maybe it's 10% of the initial Bitcoin that you're staking. So again, you're making one transaction as the user. You're sending Bitcoin to yourself. When you make that self-send transaction, you're calling the contract to start accruing your rewards and consider you staked. You also pay whatever the fee for that upfront staking is in BTC to whoever created the pool. And then again, when you are claiming your rewards, the contract is just checking, has that Bitcoin move from your wallet. So this is like DeFi 1.0, right? This is extremely, extremely basic. The cool thing about DeFi is that it stacks, right? It's like Legos. So once you have these core primitives enabled, then you can start building things on top, right? Yield aggregation, multi-pool farming. From there, you can build up, once you have enough liquidity on chain and enough stable coins and oracles built out, then you have something like Aave style lending, right? That's really sort of like DeFi 2.0. That's really kind of like the golden goose on Bitcoin. The thing that even the most philosophical or religious maximalist of their Bitcoin does not only use Bitcoin for everything all the time, everywhere, right? Unless you exist in a fully circular economy wherever you are, where Bitcoin is accepted for everything, you either have to sell your Bitcoin or swap it for a stable coin and then cash that out.
Chad, I don't think that really exists yet. Not
exactly.
yet. Yeah,
I agree. I agree. So as the most, some people who are upset about us, for example, right? They're like, well, what possible use case could this possibly bring me? Okay, I'll give you a use case right now. This is not going to happen. This will not happen day one, but this will be something that is enabled through this technology. Is you're able to build a protocol like Aave on Bitcoin that allows you to take an over collateralized loan in the form of a stablecoin against your BTC. One, you never have to sell your Bitcoin. Two, you have access to $2 to be able to pay for things in your life without ever having to actually sell your Bitcoin. And you never have to engage in any trust or any custody. So this is something that is functional for literally everybody who holds the Bitcoin asset, regardless of who you are, regardless if you don't like shitcoins, regardless if you don't like anything to do with DeFi. This is something that effectively gives value to anyone who holds the Bitcoin asset. And you never actually have to sell your Bitcoin. So you never have to take a tax hit on it. It's the exact sort of game that the richest people in the world play with their stocks. They never sell their stocks. They just take loans from banks out against their stocks. So you never have to realize the tax hits against that. It's literally the exact same concept, but it would be built natively on BTC. So this is sort of what I'm talking about when I'm thinking about, well, what are use cases of this sort of technology? I'm not thinking about, yes, there are going to be shitcoins and stuff. It's an inevitability. Why? Because I can't build a protocol that only allows for specific applications to be made without having full centralized control of that protocol. I can't be the one to sit at the top of the protocol and say, you could build that, you can't build that, you can build that, you can build that. That's what the free market is for. The free market will decide. And I don't think shitcoins on Bitcoin have a huge product market fit anyway. Yes, people are going to try them. Yes, they might have some success, but there's boom bust cycles for that stuff. And eventually, once the best use cases emerge from this technology, all that stuff gets fully priced out of the market. And only the best, most useful use cases emerge. And because of Bitcoin's throughput, the limited block space that Bitcoin has, really only 4 or 5 key use cases, I think, will survive long term, right? Being able to swap your Bitcoin, being able to have stable coins, lending, maybe tokenized assets. Well, what if you could buy Stripe or a Stretch or MSTR without having to buy it from the stock market? You could buy it on Bitcoin with your Bitcoin, fully trustless.
Right.
Like,
that'd be awesome. That'd be amazing, man.
Exactly. These are things that will inevitably emerge from this, right? Like property markets on BTC, debt on Bitcoin, equities on Bitcoin. Like, these are things that I think a lot of people who are really anti what we're doing will inevitably accept and understand is like, this provides a lot of value to me as a Bitcoin holder. And it doesn't degrade Bitcoin's value proposition of being money. It just makes Bitcoin better money, I think. So that's what I see as sort of maybe like a long-term view. That's what we're talking about early on, obviously, and what we think this will emerge from this. And yeah, again, I think maybe some people are at odds with us because they think it's going to usher in this wave of shitcoinery and stuff. And again, maybe for a short period of time, that's true, but degens always lead the way in terms of crypto and its use cases. Even degens, all the early buyers of Bitcoin were super degenerate people. They were the people who believed in something before it had any value and held it. And they were super retarded because the rest of the world said, this is not worth anything. And they believed in it. And it became worth something. And so they believed in the technology early. All the early adopters were either really, really smart or really, really high conviction people. So, you know, that's who I think are the early adopters of this. And then I think in the long term, there's going to be these really, really killer use cases that emerge from this technology that provide value to literally every single Bitcoiner, whether they liked it to begin with or not.
100%, man. I really want to drill down into how OPNet makes money. And I want to start by asking you a question about how an OPNet node operator could potentially make money. I want to learn more about the infrastructure incentives. You know, because if OPNet relies directly on Bitcoin for fees rather than on a secondary network token, and since those transactions are paid in BTC, what exactly is the economic incentive for an independent OPNet node operator to maintain this heavy global state if those layer 1 miners are the ones actually capturing the base fees? How do the OPNet node operators make money?
Yeah, so so there's technically 3 fees that you pay when you make an OPNet transaction, which is a Bitcoin transaction. But you're making a Bitcoin transaction that's an OPNet related activity. You're really paying 3 fees. You're paying the layer 1 Bitcoin fee, which goes directly to Bitcoin miners. Yes. The other 2 fees that you pay are the gas for execution, which is also paid in Bitcoin for whatever you're doing. And then the third fee is an optional fee, which is the priority fee, which is the transaction ordering fee. So if you're in the block, you don't care whether you're processed first or last in the block, it doesn't really matter to you. You don't have to, it's optional, it's opt-in. But you send with a 0 priority fee and you still get processed as long as you're in the Bitcoin block. and it all happens like this, right? The actual execution happens nearly instantaneously. But the priority fee is something that you can obviously pay to be executed first or earlier than others. That really has to do with the type of transaction you're making, really. Okay, those fees, which are paid in Bitcoin on Bitcoin, get aggregated into specific addresses in a period of time, which we call an epoch, which is a multiple block period, where all the fees, all the transaction fees, like the gas fees and the priority fees for that period of time, get aggregated into a new address, which we're doing using Bitcoin's native scripting capability, sort of that undocumented part of Bitcoin, that Bitcoin has a lot of native scripting capability, into these addresses that are encrypted with SHA-1. SHA-1 is a crackable encryption method. So what that means is that it's intentionally breakable, right? SHA-256, you're not cracking SHA-256, right? You're solving these proof of work blocks with your ASICs mining SHA-256. It's not crackable. SHA-1 is crackable. You can find collisions with SHA-1. And so these addresses are intentionally encrypted with SHA-1 so that anyone who's running a OPNet node, which is a Bitcoin node, specifically, just to be super clear, it's a full Bitcoin node with the OPNet runtime attached to it. So the VM and the runtime is attached to a Bitcoin node. That is what an OPNet node is. And so users who want to elect to mine are mining with their GPU, these SHA-1 addresses, and finding the closest collision to these SHA-1 addresses. Then they are essentially, to oversimplify it, are submitting the solution to the SHA-1 puzzle on BTC. And when they do that, they're also submitting a checksum root, a state hash of the state of the network, so that any of the other nodes have an on-chain pointer to verify their local state against. And that also strengthens the peer-to-peer network, aside from the mathematical determinism that already is its own sort of consensus mechanism. So they submit all of that in a transaction, and they're able to retrieve the Bitcoin out of these SHA-1 addresses. And so that is the incentive to run an OPNet node. If you want to elect to do so, you can run a node without mining. That would be to verify state locally. If you want to be an infrastructure provider, like Infura sort of services, one of the services we will provide. But again, actually, all of the pieces that we built in terms of our company and our infrastructure are things that are not gated to us, right? Like anyone can go in and build their own block explorer, or build their own wallet, or build their own infrastructure provision service, or build their own DEX application, or build their own anything that we're doing. We didn't game the system so that we have an inherent advantage. Our advantage is we made the open source protocol, so we know it best, right? I mean, that's our products. As long as we're diligently building them, are hopefully going to be better than other products on the market, and that is our edge. Our edge is that we have to provide great services and great products and great infrastructure and great applications to the market in order to make money. We also will engage in the SHA-1 mining as well to capture those addresses. But again, this is not something that's directly gated to us. Anyone can participate in the system and strengthen the consensus of the network.
That's amazing to hear, man. So, one thing that I always look for when I'm researching a new protocol like OPNet is, and do you pronounce it OPNet or OPNet, or does it matter?
it's OPNet, but again, it's
OPNet.
We sort of named it. We sort of named it badly. So
no, I like it, man. I like it. OPNet. So, I want to make sure that you guys are going to be around tomorrow, right? How does OPNet make money? Like when you go live, what are going to be your top revenue sources?
I think immediately it will be it's sort of hard to predict. I think that we'll obviously have like our infrastructure is going to be very, very key, right? Like that's going to be something that people use immediately. That's all for our entire vertical is, immediately usable products for the market, from the wallet to the block explorer to our charting website. And each of these has its own sort of product vertical and revenue stream, providing infrastructure as well, paid APIs, etc. Mining SHA-1 is also going to be a revenue source for us. And then I think as more players move into that market and like, yes, we'll have dominance, but there's nothing that maintains our dominance aside from us providing great products. So other people will inevitably move into this market. It really has to do with, can we continuously provide value in terms of applications that we develop? Can we continuously provide value in terms of filling gaps in the market for infrastructure? And then, yeah, so that's really our model, is that we're building technology around this open source piece of technology that we created, right? Like, we are on the same level as everyone else. We just have the team that built the protocol and a really, really solid team of developers, engineers, product managers, marketing guys. Our team is very, very strong. And so, yeah, I mean, our company itself theoretically could fail, and OPNet still exists, right? It's an open source protocol. Anyone can run an OPNet node themselves. We could, as soon as we put it out live, technically we could all disappear and die or something, and the protocol still lives on, right? It's something that once we put it out is out there forever. The source code is all open source on GitHub. It's been open source since the beginning, since we started building it. That's not what will happen, but that is just how we're thinking about. The company side is not inherently tied from, success doesn't exactly translate to our company success, but we are building products and building pieces of the ecosystem that we think are essential and key. And it's up to us to continuously provide value. It's up to us to compete and build great products so that the incentives align. If the protocol gains adoption, our company performs and does well.
Right. So I still just am not quite clear on how OPNet, the business,
Yes.
drives revenue. Like, if you've got a big team and you're
Yeah.
building all of these products and you've got expenses, how are you covering those expenses? How does OPNet, when you go live, actually drive revenue?
Yeah. Okay. Let's just examine the value of Consensus on Ethereum. Consensus with a Y, right? They're the main infrastructure provider for a lot of. They own Etherscan, they own MetaMask, they own Infura. These are basically the verticals that we've built as well for Bitcoin. And again, each of these products has its own revenue stream. Like, the wallet itself has revenue from in-wallet actions like swaps that we take, like a front-end fee on, or you do contract deployments. We'll continuously add features into the wallet.
Got it. That's what I'm trying to get at. Yeah. So that's
Yeah.
what I'm looking for. Like, so you've built in, it sounds like, small pieces of friction that enable OPNet, the business, to continue to survive. Is that how it's going to generate revenue?
Yeah. Generally, for example, the Block Explorer, right? Etherscan itself makes a lot of money. They do so by providing paid APIs. Anyone who wants access to Etherscan from it's a high traffic website, so they're operating a website that does have advertising. So that's another thing that we'll obviously monetize long term on that specific vertical. But you also have paid APIs for Etherscan, which is the same thing we have for OPScan, which is like mempool.space, for example, right? Is the Block Explorer right now for Bitcoin, but it is not built to track where are smart contracts, what do they look like, how do I get access to intricate data about where are assets within the Bitcoin network.
Right.
That's a gap that we're filling. That's super, super crucial. And that's something that can be monetized as well, right? Like, paid API tiers are how Etherscan makes most of its money. Same thing with Infura, right? Yes, you can run a node yourself. Anyone can get into that business of running a bunch of nodes themselves and offering the service in a paid API service to others. But that's also part of our business, right? So again, we have built it's a tech company around a crypto project, right? It's sort of how I can really describe it. Same thing goes for like MotoSwap, for example, right? MotoSwap, it has a token. The team has some supply of the token that has attributed to some ownership of the overall company. When we develop a future application, let's just say in the future we build a lending application, right? That itself will have its own revenue stream, whether it's a token or whether it's just fees from the protocol. It's up to us to sort of decide how we want to build our products. But again, importantly, that is siloed from the overall protocol itself, right? The protocol itself is an open source, permissionless, decentralized protocol that anyone can interact with, anyone can build anything with. We didn't give ourselves an inherent edge from a protocol level design. I hope that makes things a little bit more clear.
Yeah. I just really wanted to understand a little bit better how OPNet was going to be able to survive long term, what you were planning to monetize. But I'm sure that we'll find out more over the coming weeks after you actually launch. Now, Jeff, do we have any questions maybe from X or from YouTube that you want to particularly touch on before we run out of time here with Chad?
I haven't really seen. Oh yeah, DeFi Don. Well, the OP or OpNet doesn't have a token itself. It's a
That's
Moto
right. Yeah.
Swap and Orange Pill. And I did see earlier in when we first started was some people asking about the airdrop from Orange Pill and Moto Swap. I know there was some issues connecting your wallet at first. Like some people didn't show their allocation, or it showed that they weren't eligible. But now all that's been fixed. So if you've been active and stuff, go to the orangepill.fun, I think it was, and
Yes.
the Moto Swap site .org/claim and connect to your wallet. But you got to make sure you're connected to the Bitcoin mainnet in your wallet, not the OP testnet.
That's right. Yeah. This is a piece. Okay. Like, we want our wallet obviously to do well. We think we built a great wallet. So we pretty pointedly didn't court, a bunch of other Bitcoin wallet providers to come in and support OpNet day one. This is our moat that we can theoretically draw. It's not a code level moat, but it's just any Bitcoin wallet today can go and build out OpNet functionality. All the documentation is out there. It's easy to integrate, but we didn't go out and do a bunch of BD to try and get a bunch of wallets to support, because we want adoption for our wallet, because we think we built a great product. And so, yeah, basically what you have to do is whatever wallet you have to import the seed phrase into the OP wallet. Again, it's a non-custodial, it's just a standard Bitcoin wallet. And so, yeah, you connect to the website and you are able to check your airdrop allocation, et cetera. When it comes to airdrop and airdrop farming, you have to make decisions as a team when it comes to people who like bought the test net and do stuff that we pretty expressively said, like, don't do this. This will disqualify you. There are qualifications for doing some of this stuff. And yeah, sometimes you end up there are some people who feel like they were, slighted or something, but we were pretty clear about what the rules were to be able to qualify for some of this stuff. And then again, obviously the Orange Pill team has their own qualifications that we've been kind of working with them on. And so that's sort of, I can't really say too much more about it. There was a snafu when we first enabled the airdrop checker where no one was eligible. So that was a total mess. But it was all fixed on our side. So you should be able to go and check now. And then again, like, there's going to be a ton of cool things to do and cool opportunities for all the users. And I think, again, it's a very underrated aspect of having messed around with the testnet for X period of time, that you have an inherent edge on any other user who's coming in and trading. Like, how this works. And a lot of other people are going to have to face the friction of doing all this stuff for the first time on Bitcoin, whereas you are experienced. So if you have the ability to do so, you'll have an inherent edge on everyone else as to how do the farms work? How does the swap work? How does native swap work? You'll know before everybody else. So that's sort of the other added benefit to having participated in the testnet campaign.
Hey, Chad, real quick, sorry, I want to jump in here. For the last 15 minutes, would you mind kind of just, I'm going to throw Jeff's screen up and maybe just like walk us through some of your websites, and just so people know where to find, all these different things that we've been talking about, because I think that's what's key, is to, kind of show people, where to get the information, where to access this stuff.
Yeah, so you have a sort of a number of different websites. You obviously have opnet.org. It's sort of like an informational hub. That's like our website. You have docs.opnet.org that cover all of the technical documentation. You have defibible.org, which is sort of the non-dev rundown of not only the thesis, but sort of a guide for what did early DeFi look like on Ethereum and what can you expect on Bitcoin. And how do we sort of see this emerge, and also kind of going through our thesis for why DeFi on a slower chain actually is much, much better and more optimized. which we can even kind of get into here if you want.
Yeah, that's the slowfi thesis,
Yeah,
right?
that's our slowfi thesis, exactly.
Yeah, the
Right,
DeFi
right, right.
Bible site is great because of the Galaxy
I would,
campaign that takes you through all that too, and really understanding, like giving you a whole quiz, like 20 questions, digging in, really makes you dig into this and understand it a lot better. And that's,
yeah, and
I was kind of,
from
I
our
hadn't heard
perspective,
that thesis before either. So
that's our own creation. You know, from our perspective, like we want testnet users to obviously have some sort of, we wanted them to have some sort of incentive, of course, but at the same time, like education and understanding exactly how this works. Like we don't need, you know, we didn't do this to try and get, you know, an army of people who are just going to leave when the protocol launches, right? We want people who understand and have used the protocol to be able to be the early adopters of the protocol. If you look at any other, you know, booming ecosystem, all the early adopters are the ones who had most of the most success. So so the slowfi thesis I can kind of get into here a little bit, which is basically just says like, okay, DeFi doesn't inherently require high throughput. In fact, the core elements of DeFi that make it successful is liquidity and security, right? Exit velocity, as it says right here, actually generally kills DeFi protocols. Why? Because a huge portion of DeFi protocols involve staking or farming, places where you don't want to be able to claim for basically no money your rewards every 10 seconds, right? You want exit friction. You want a lot of the ability for a lot of liquidity to flow in and friction for it to exit. You want incentive to stay staked. Like let's go back to when in trading on something like Ethereum, right? When ETH was expensive, they optimized Ethereum to actually make it better. But actually, when they did that, Ethereum's DeFi market cap went down significantly. Why is that the case? At some points, I remember paying over $100 for an Ethereum.
I know, right? That was crazy, man. Oh.
Yeah, it was. Yes, it was crazy. But at the same time, you're not going to make a transaction unless you think you're going to be able to make money, right? That is sort of the psychological result of an expensive mainnet. Is that what happens? If it's going to cost me $100 to make a transaction, I'm not going to make a transaction unless I feel like I can for sure make that money back and then some, right? So it prioritizes high value transactions. It also incentivizes you, if you're within a DeFi ecosystem, to stay within that ecosystem and potentially to grow, for that ecosystem to be able to grow. So high exit velocity. And again, you can look, Solana's never had really, has never really had a big DeFi boom. Any of these hyperscale chains that have launched have never really had big DeFi booms because it's extremely cheap to be able to do anything, and you could do everything so fast. The only things that really, if we're really thinking about it, the only things that really require high throughput are payments, perp dexes, like perp trading, or like meme coin trading. These are sort of the three things that are way more optimized on a fast chain. But lending does not require high throughput. It requires liquidity and security. Staking or yield farming or high value swaps even don't require. Let's just say I wanted to get $1 million worth of a stock off of a stock market, right? I can't do that in 10 seconds, right? It will take me much longer than 10 minutes for me to be able to recognize my profits. You know, there's friction in the traditional finance world for a reason, because friction keeps liquidity within that system. And so Bitcoin has this built-in friction, not only with the block size, which is a benefit, but also the speed of the chain. And so it's actually, in our opinion, it's really the best environment, I think, for DeFi. And then on top of that, you have the decentralized nature of Bitcoin itself. It really is the best chain for this activity to really happen. So that's sort of our SlowFi thesis, a little bit broken down for you.
Gotcha, man. Yeah. So, when I'm taking a look through the Bitcoin DeFi Bible, I want to also be able to, just touch on the other websites that are important for anyone watching who wants to be able to learn more and, operate on OPNet. And so I've got DeFi Bible here. Give us a couple of other sites here, Chad.
Yeah. Okay. So of course, like you definitely want to be familiar with MotoSwap. You want to have OP Wallet downloaded. It's a Chrome extension. It will be on the Apple Store and the Google Play Store as well. for mobile versions. That's something that you for sure want to have. That is sort of your entrance to, you don't have to bridge anywhere. You're only on Bitcoin, but this is the wallet to use to start out with. Obviously, other wallets and stuff will eventually support this activity as well, but this is the wallet to use. So get familiar with this interface and get familiar with MotoSwap, trading there. Use vibecode.finance not only to be able to participate in the competition that's being run right now, but also to explore some of these applications that are being built, because that's really, that will also give you an edge. You can test a lot of these applications out there are on testnet right now. So you can go and test these applications, see which ones you like, see which ones you think might be really solid, see which ones might provide value to the market, see which ones you might be really interested in using yourselves. And one, you'd be supporting those builders by testing their products. And also two, you're going to be able to really learn a lot more about the full kind of emerging ecosystem that's going to come out starting within a week from today.
Yeah, man, this ecosystem sounds really interesting. So let's say that I want to build some product on OPNet.
Yeah.
How could I potentially monetize that product on OPNet if I wanted to?
Yeah, I mean, there's a number of different ways you can do so. I mean, it sort of depends what you want to do, right? You have the ability to, and this is actually a framing that it's semantic for sure, but it's a framing that I think I want everybody to really understand, because this kind of helps people, I think, really conceptualize what's going on. You're not really building on OPNet. You're building on Bitcoin layer 1 using OPNet, right? OPNet is just a tool that allows you to build on layer 1 Bitcoin. So if I'm building a layer 1 Bitcoin application, what can I make? I can make a DeFi protocol. That DeFi protocol can have its own token if you want. Obviously, there's going to be a lot of tokens that launch, so you can launch your own token. Maybe it's a fee generating token. Maybe it's a DAO token. Maybe it's a staking token. Maybe it's a total shitcoin. Whatever you want to do, you can build. I mean, you could build a game where you have an in-game currency. You can build. Again, there's someone who built a invoicing and billing, right? That just takes a fee for the activity that you're doing, right? Just like any other application anywhere in the world. If I want to make an application on the internet, literally today, how would I monetize it? You should think about it the exact same way, except the difference is instead of being paid in fiat currency, you could be paid in Bitcoin for these sort of applications that you're making. And the hosting of these applications is done on Bitcoin layer 1. And users are interacting with your applications through Bitcoin layer 1 transactions, which I think, again, it's definitely a paradigm shift, but there's sort of a limitless amount of things you can make. The question really is, can you build something that the market is interested in or provides value to the market? Does it have product market fit? And that is sort of we're providing the value proposition to everybody, which says it's up to you, the user or the developer, whoever you are. If you have an idea or you're a trader or you're an investor, that you can build anything that you want on Bitcoin now. And if you build something great, then you'll be able to capture value in whichever way that you so choose. If you want that to be through a token, if you want that to be through fees, you can do so.
Wow, man, that's really cool. So something that you said a moment ago caught my attention. You said that it's hosted on the Bitcoin layer 1.
Yeah.
So that must mean that these, I think they're going to be referred to as dApps, basically,
Yes.
Right? So
Exactly.
that must mean that these dApps are very lightweight, right? If they can be hosted on the layer 1. So
yeah, the smart contract bytecode is, and this is actually addressing like a huge vector of FUD that's going on right now, which is that we're going to bloat the Bitcoin blockchain. It's actually not true at all.
I hear that from everyone who talks about OPNet.
Yeah, everyone is conflating OPNet's design because I haven't dug into the documentation and a number of different things. A lot of people are traumatized by ordinals, which I understand. Ordinals bloat the Bitcoin blockchain. Why is that the case? Not because they're making transactions. Transactions don't inherently bloat the Bitcoin blockchain. What bloats the Bitcoin blockchain is actually what's called UTXO bloat, which means that we're creating these new UTXOs. Bitcoin as a network, the idea is not, a lot of people don't understand this, but Bitcoin is not, oh, there's 21 million coins and that's how Bitcoin works. No, it's a ledger. So when I'm sending Bitcoin from me to you, I'm not sending you a Bitcoin. I'm destroying a UTXO -1 to Chad's balance, +1 to David's balance. So
that sounds great, Chad. So, you can do that anytime you want. If you just want to send me 1, 2, 3 Bitcoin, man, you can do that.
Okay, but that's how Bitcoin works.
As long as you send me some after. I'm still learning how all this works. So David needs to send me
You
sats.
need some more experience. Yeah,
it takes time. It takes time.
Yeah. what Ordinals has done is basically said that your asset is tied to a UTXO. So the bytecode for your JPEG is tied to a UTXO. What does that actually mean? When I create an ordinal inscription, I'm creating a minimum sized UTXO. And when I'm making a 10,000 ordinal collection, I'm creating 10,000 new UTXOs that all have their assets tied to them. When I am creating a BRC20 token, which is like a shitcoin that is made with ordinals, and I have a billion supply of that token, which there are many, many, many of these, I'm creating a billion new UTXOs that the asset that you hold is tied to that UTXO, which means that it bloats the UTXO set. The amount of UTXOs that are in existence are inflating to infinity, basically, every time someone's creating one of these assets, because the assets themselves are tied to UTXOs.
So why does OPNet not do that?
Because we're a smart contract-based protocol. We are not saying that the ownership of your asset is tied to a UTXO. We're saying, just like every other smart contract-based blockchain, the asset itself is a virtual asset within the network. So when I am on Ethereum, for example, and I have a smart contract, I have Tether on Ethereum. I'm not trading a little piece of Ethereum around that says, hey, here's a piece of ETH that has Tether on it. That's not how it works. There's a smart contract that says, here are the rules for the USDT asset on ETH. And I am making a call to that contract when I'm moving my Ethereum around. When I'm moving my USDT around. So the USDT is actually a virtual asset within that system, which allows it to be held by smart contracts and do all this cool programmable stuff. The same thing applies on Bitcoin with OPNet. So when I'm deploying an asset, I'm creating a smart contract, and the actual asset itself is not let's just say I want to put USDT on Ethereum, on Bitcoin. Sorry. I'm creating a mint and burn contract, literally the exact same way I would on ETH. I create a mint and burn contract on Bitcoin. And when someone is moving their USDT around, they are just sending a call to that contract that says, this is where the asset is moving, and it's a virtual asset on Bitcoin.
So it's very lightweight, very lightweight.
Not only is it extremely lightweight, but also all the contract calls. So you might ask, well, okay, so all the assets are not bloating they're not creating these new UTXOs and bloating the blockchain, but what about all the contract calls and all the activity that people are doing? We created these so they are less than they're less than dust limit transactions, which means that the UTXOs themselves can be consolidated by miners, which means that there is no permanent UTXO bloat, because all of the transactions that happen, like the ledger itself is immutable, right? But the existence of these UTXOs, there's all of the smart contract addresses, or what we call anyone can spend addresses, which means that miners themselves can go in as soon as there's enough economic incentive to do so and consolidate all these UTXOs that are the contract calls. And because the ledger is still immutable, the state is still there, right? But the actual existence of the UTXOs can be consolidated into Bitcoin and then spent by miners, so that there is no permanent bloat to the blockchain. It's a super crucial and important difference between, right. Because the concern about ordinals and UTXO bloat is it's super real. Because if I'm running a node and the UTXO set is bloating to infinity, it all of a sudden becomes way more expensive for me. And I'm now using my node as data storage, which is not really what nodes are supposed to be used for. With this system, we're not asking anyone to store data permanently on their nodes. Like, all these transactions are prunable transactions, and they're consolidatable UTXOs, and we're not creating this UTXO bloat. It's a way more efficient system to get way more done, and it doesn't do any damage to BTC. And in fact, the person who gave us this concept and advised us on building this is Luke Dasher, the guy who is behind BIP110 and Ocean Mining, the leader of all of the ordinals destroys Bitcoin, and they want to fork BTC. That is the guy. We had a multiple hour long consultation with him at our house in Abu Dhabi, where we asked him, hey, listen, you don't want any of this activity on Bitcoin. We completely understand. There's demand for it. We're going to build it. how would we build it in a way that does the least amount of damage to Bitcoin possible, or effectively does no damage to Bitcoin? And he gave us a lot of the protocol design influence that we inevitably built into OPNet. And so, I mean, he doesn't like what we're doing either way, so he'll never co-sign it. And I think he's a really smart guy. I think he's a really smart guy. He's an experienced Bitcoin developer, and he has his own journey. He has his own morals. He has his own sort of vision for where Bitcoin's going to go. But we consulted him, and he was willing to give us this advice, and we built the protocol following his advice to try and make sure that the protocol doesn't damage Bitcoin in any way, because we want to be aligned with Bitcoin. Despite all the people who are hating on us for trying to do this on BTC, our goal is to provide value to Bitcoin. Our goal is to not be parasitic. Our goal is to not take liquidity away from Bitcoin. Our goal is to help Bitcoin long-term, and we don't want any aspect of our protocol to be damaging to BTC.
Well, Chad, everything that you said here today makes me a lot more confident about the future of OPNet. Very, very happy that I had an opportunity to ask you questions in front of the hundreds and hundreds of people that are watching live right now. Thank you, man. This has been great, a lot of fun, and it was great to meet you.
Yeah, really a pleasure.
Yeah, it really was, and I appreciate you taking the time, because I know this was a little bit long, but I just felt it was really important to get this information out there. But I do want to ask everyone out there. We have almost 700 people watching live. If you could, please help us grow the channel. We do all this for free. None of this is paid. Chad did not pay to be here. This is we just want to give you good alpha. So please, at a minimum, just like, follow, share the stream. Help us grow so that we can, keep giving this information out, this type of information, these interviews and things like that. Because the larger, our audience, obviously, the bigger projects that we can get to come on here, because their time is valuable. So, with that, I'm going to go ahead and kick it back over to you guys. Go ahead and wrap it up, and we'll end this.
Yeah. So I think, Chad, with everything that I've learned, my first step is going to be building on OPNet once it launches, man. And so I'm just taking a look over here at vibecode.finance. Really, really cool stuff, man. I think I'll probably end up vibing something up. But here's my 3-step process, okay? Step number 1, when I vibe code, got to get drunk as fuck. Step 1. Step 2, spend 6 or 12 hours in front of cursor, okay?
Oh, yeah.
Step 3, profit. That's it. Drink,
I like that.
vibe code, profit. That's all you got to do. So I can't wait
listen,
to start building, man.
If you build something great, I recommend, leverage the tools that are out there with MotoSwap and, deploy a yield farm if you want to bootstrap liquidity. I mean, look, the reason why we put these pieces out there is because there is not the rails that are on like Ethereum or Solana for token launching. And token launching on Bitcoin should be fundamentally different than these other chains. You shouldn't have like this. Bitcoin's not cheap. So you shouldn't have this sort of infinite flow of tokens. You should have the ability to bootstrap liquidity and distribute your tokens in a way that builds up liquidity for whatever protocol or token that you have. And then again, like, you can make something that provides value. And if you're an active participant in the crypto market, you know what you want to see. Like, we built this protocol not because we had, we were inexperienced and we came from Stanford and we were like, this is going to be the best. We wanted to see this in the market, and we just made it. And that is the exact sort of thing that we want other people to do as well. That's why we try to make it as easy as possible.
I love it, man. I love it. So, Chad, don't want to take any more of your time. I think we got to run. Hand it over to you, Vet.
I just wanted to say thanks again, but maybe after the dust settles, after your mainnet launch, maybe we can have you back on, and just you can give us in the community an update on how things are going.
100%.
Perfect. Love it.
100%. I would love to. All
right.
Awesome.
Well, if you want to join us tonight, me and Jeff are going to be doing a crypto and chill. So all of you out there, if you want to come on over to YouTube, it's at @thenode_channel. We're just going to be hanging out, maybe having a couple of drinks and just kind of talking about the market. So until then, join us DeFi Don on Monday. He's going to be starting up DeFi High, entry-level DeFi education. And then me and David will be doing this show Monday through Fridays, 9 a.m. to 11 a.m. Pacific, noon to 2 Eastern. And until then, Veteran Crypto out.
Peace.
Peace.